Welcome to SPEYEK7, brought to you by Slingshot Options uh, Swing Trading Covered Call System. This is a system. This is a review, a preview, just telling you what this product's about and how it could help you potentially make a lot of money, make cash flow off your stock holdings in a very high precision way. And this is a method that is can be used as a strategy or over and over as a system. It's a very fundamentally sound strategy that can work very well, giving you an exact plan, knowing when to sell calls exactly, and go scoop up momentum. See, a lot of people have this idea due to so much marketing on these really lame concepts of covered calls that just cause nothing but trouble, right? And so I had to go fix it. So I did. And now I've developed several swing trading covered call systems. Now, ultimately, what you want to do is you want to actually think of selling covered calls as swing trading your covered calls, because you want to ride momentum. You want momentum on your side, and you either want to just go a little bit in the money and just go collect more points, all right? Or you can actually go time your swing, so you can just go expire it in the money on a weekly option basis. And so probably should have added that here, weekly options. But anyways, so why weekly options? Because that's your juiciest, plumpest premium relative to time and fastest rate of premium decay. So why would you not? All right. Plus, it fits well into a swing. A swing is just a one-shot type of directional movement. There are different kinds of swings, but the standard swing 2 to 5 day move, that's a one-shot directional move, and we want to take advantage of those and know exactly when to sell the covered call. Here is a sample track record. Okay, it's run on 1,000 shares as an example. And you can see as an example here let me get this up here. You can see the example here of how we're doing this. And as I mentioned earlier, in this case, we're looking to ride a little bit in the money into expiration on a weekly basis. And so, so we're looking to combine momentum and premium decay to give us a maximal profit. Now, with the weekly options, okay, where we are looking at selling into money a little bit, we were getting 2.3 ish average on premium at that point, and it just we have 50-cent strikes going on here. So we're able to go and sell this a little bit in the money, and then all we need to do is move very slightly in the stock to go past expiration. To go past our strike, okay, and then look to just stay past the strike to expiration. Expiration is when. You have expiration could be tomorrow, could be 2 days from now, 3 days from now, okay? Depends when you sell it. You could go out the next week if you want to just sell it that way, maybe taking more premium, but it just depends. If you were, for example, if you are in a downtrend, well, maybe you want to go sell a little bit further in the money, because the tendency is that you're going to get the bigger swing to the downside. If you're in an upswing, an uptrend, chances are your pullback swing, because you have to play the downside all the time when selling a call. Chances are your pullback swing isn't going to go very far. Now, if you're in any sort of channeling scenario, especially a sideways channel, then you can go take advantage of that, and because the movement should follow through quite nicely in that channel. But otherwise, then you're going to have to determine what you're in, just to know relatively how deep in the money you want to go and on that sold call. You don't have to go. You can go right at the money if you want. You don't have to, but going out of the money is pretty much a waste of time. So, because you have risk to reward scenarios, okay? And so now and you want to make some money. All right, you don't want to involve your time making peanuts here. Okay, so here we have 1 year sample, and you can see here the winning percentage is pretty good. 80% is, that's really good. All right, and this is a very solid method. Okay, just understand it is very solid. So I would definitely add this to your arsenal. I definitely start working on assembling your covered call portfolio. I mean, it's way better with my systems. My approach is way better than real estate, right? And then granted, you can hire professional rental management in real estate. For example, if you have properties for cash flow. Here, well, I mean, why not go hire someone to trade your account for you? I mean, get a family member. Say, hey, you can have, whatever you work out there. Anyways, so that's just a creative idea. But anyways, you want to get a system that can show you an exact way on how to sell a call and not go and sell a call at a bad time. You need high probability call selling times. And so here the 600 means that we have a stop loss, average stop loss, and then plus this is what the math was when this was figured out. Okay, so the win. A lot of these wins are $2,200. Okay, on 1,000 shares, and we just kind of rounded it down on average just to equate for some trades that may have not gone that far, or some trades the sheer momentum, you could trail stop out the swing and just collect what's there, not wait until expiration as well. But this system, we actually go for expiration, and this is what we come out with. So this is a very simple type of mindset to it. You always have to manage your trades and put your contingent orders in there for entries and exits, stop losses. But so, anyways, so you don't have to watch the markets all day. I should throw that in as well. This is a home study course. It's going to teach you the system. Okay, and so you'll definitely want to add this one. This is a must-have if you're looking to be a good cash flow cover call seller. And over time, man, if you can build your portfolio to 20, 30,000 shares, okay, and then let's just say you got 30,000 shares. Let's just say overall your stocks, you're able to net out, let's just call it 1.5 points. Okay, so let's say you had 30,000 shares. It doesn't have to be dramatic stocks. And let's say you had you're able to net out 1.5 points. Oops. Okay, I think I'm doing this right. I knew something went wrong there. So 45,000, $45,000 a week. Okay, weekly option. Now, these are on average concepts, right? Theoretical type of thing. We're just getting this type of math you want to aim for. So that's pretty nice. And this type of scenario can be obtained by becoming very systematic. You can't wing it. You can't go by feel. You can't, go selling out of the monies. You need to time your cover call selling with the swing. You have, it's easy or a lot easier in a downswing, and it's pretty easy in a channel. When you're going against an uptrend, that's when you're going to just get less. So you put them all together. And so anyways, but even in upswings, a lot of the uptrends are channels, uptrend channels. So it'll often give you a decent swing backwards, but not all the time. Anyway, so this is a great strategy, or a system with a great strategy behind the system. And if you're not on this site, then come on over. This is another Slingshot Option Series come on over to slingshotoptions.com or optionstradingauthority.com, and you can check out more information and purchase the system there. All right, thanks.